Wow, wow, wow. What a week for RWAs. What an episode we have lined up for you today. What's going on, everybody? I'm Herwig. You can call me Happy, and I am ecstatic today about tokenization. I've got two amazing guests lined up and on top of an interview with none other than Yuval from Canton Network. They just announced a massive monster funding round, but I've got two VCs lined up waiting in the wings to talk about what happened in tokenization this week. So let's get into it. Nico, Tal, and none other than Jason, our producer and correspondent from STM, joining us today. What's going on? Nico, you're actually not in Dubai. It looks like you're in the Netherlands. What's going on? Our returning guest. How are you?
Absolutely. Happy Independence Day for you guys.
Thank you, sir.
Right.
Thank you, sir. We are celebrating. Happy 4th to all who are listening.
Yes. And of course, very happy to be with DOG RWA VC in this call. Tal, welcome.
Thank you, Nico.
Tal, the managing partner of Spice VC, as Nico just well introduced, an OG RWA firm. We actually announced, for those who remember, that they just did their third investor payout, an insane return that I think investors are getting. We can let Tal talk about it. Tell us, what's the latest with Spice VC in your world?
So you teed it up correctly. It's the third payout distribution that has just been executed. That brings the fund's performance to a over 2.1 DPI, distributions to paid capital. This is about, it's more than 2 times the average performance for the top decile early stage VCs. So that's really significant. And it brings the performance of the fund to an over 6x TVPI, total value to paid in capital. Again, this is like 3 times the average performance of top decile VC in the 7th year. So that's very exciting and great event for investors, and we're looking to continue that way. So this is very exciting and a very happy week from that perspective.
Yeah, no, it's an absolutely incredible accomplishment. You should be proud. Truly a top performing early stage fund. I mean, you have a knack for investing, Tal. In fact, whether it's not just blockchain or Web3, but AI, VRAR, quantum, genomics, we're talking about, as you call them, technology waves that have the potential to create generational wealth here. Investing in revolutions. Tell us about your book.
So to those who don't know, this is my new book. It just came out mid-April. It's called Investing in Revolutions, and it's exactly about it. It's about investing in transformational technology waves. It's a book not for investors, or not only for investors, it's for anybody who's interested in improving the way they invest in technology waves. It talks about 2 things. First, it talks about the quantum revolution, as I call it. It's the current technology wave we are beginning to see forming, although we've heard about the different parts of it. It's a combination of multiple technology waves, but the convergence of them acts as a factor in accelerating things. It's AI, it's quantum computing, it's blockchain, it's IoT, it's robotics. All of them accelerate each other. The interesting thing is, and what the book deals with, is different frameworks for investing in new technologies, showing how this technology wave, which is the 5th technology revolution since the Industrial Revolution, all those different revolutions have a lot of things in common. It's important to understand them because these patterns, although they manifest themselves differently, they make sense and they repeat in every transformation like this. There are different models looking at this. The book deals with those models and brings examples from companies and events in history everybody recognizes. And really, at the end of the day, it's about asking the right questions, understanding the force field factors that have to come together for a technology to really break out and succeed and be adopted, and understanding timing issues, understanding the difference between hype and reality, what questions to ask, what to look at, and how to figure out your own risk reward and timing equation to figure out what to invest in, how to recognize the different players, and how to do it. So there you go.
You're giving all the secrets away. Definitely worth checking out. It's on Amazon, folks. It's available out there today. So go check it out. Go give it an order. Give it a review, 5 stars. It's really deserves 6 or more. And Tal and Nico, we have 2 of the top RWA VC funds also here, right? So this is a big week, I think, for tokenization. Whether you look at the big moves on the stablecoin side, firms like Circle and Ripple applying for licensing, which we can get into, all the way to a lot of commotion between private companies being tokenized and traded without their permission, to incredible fanfare with none other than Vlad Tena from Robinhood being in France in a nice car hosting this amazing event to debut their rollout of tokenized stocks, and him with this little whiteboard. You got to see it, trying to explain stocks all over the place. It's hilarious. But it brought a lot of attention, guys. So what do we want to tackle first? Should we start with the good stuff, or do we want to start with what this bank licensing means?
I think starting with the good stuff is that RWA is taking for the first time the main stage. That's very important. We have, as we were discussing before the show, we've been waiting for 8 to 9 years for this moment. It's the stablecoin moment for RWAs, in my opinion, and we need this because this is how the financial sector will transform to these blockchains. And this also commingles with the moment that stablecoin issuers are licensing for bank licenses. Because in my opinion, banks are just going to be applications on blockchains in the future, and now they're converging that banks are becoming stablecoin issuers, and the other way around, that stablecoin issuers are becoming banks in essence, but they're all apps on blockchains. And the next iteration will be that all the other assets we have in our wealth today, like equities and bonds and all the likes, paintings, art, the likes, are coming to these blockchains because this is the best value distribution network in the world. So yeah, it's a good moment to be RWA VC. Won't you say, Tal?
Yeah, I think, it's very interesting. On one hand, if I stay true to what I talk about in the book, I don't like to talk about moments because, the world does not move by moments. I think those moments are really important. They're important because they raise different things and they create discussion and they kind of put markers for people to look at. But if you look at this, since the beginning of the year, I've seen that this is the year of stable coins, right? That's really significant. A year is not a moment, right? A lot is really happening, right? We've seen significant movement in Europe with MiCA and regulations around stable coins and around crypto in general. We've seen the US moving significantly with the Genius Act and everybody reading the signs and the tea leaves. Even Bank of America, that has been doing a lot of work around blockchain for years now, but never really entered the domain business-wise, is already talking about issuing a stable coin. So it's like it's becoming real, and stablecoins becoming real, not that they weren't real before, but real in terms of entering the mainstream of financial industry, not as part of DeFi and not as part of the crypto world, but as part of mainstream back office business type of thing, is really significant in my mind. And it's really significant to real world assets because it opens up, the same domain for exactly the same thing. Nico, we know that for years now, many of the major players have been tokenizing assets in back office operations to simplify processing and settlement of transactions, both in the securities industry and in payments, right? And we know that all payments players, all of them, are doing stuff with tokenization. This brings it more than one notch up, I think. And so I think it's a very significant year in terms of our real world assets. And, we've been investing in this domain because we know, not just believe, we know that certain financial domains, definitely payments, credit, a lot of function in banking, and definitely securities are going to be tokenized, not decades from now, but 5 to 10 years from now. So every step like this is another major step towards what we know is happening. I think it's very exciting. Yeah.
I think it signals too, right, the fact that there's more legitimacy in the space. These are, if you're applying to be a bank, you are asking to be regulated on a more, heavy level. Now, these are trust banks. I do want to make that, but again, it's a start, right? It's a trust charter bank, so you can't accept deposits. But it does set them up on a path for a Fed master account down the road, which, to your point, Tal, I think it's all about steps, right, and progression, as we've seen in the past. So this is really interesting, I think, again, for the optics and the regulatory portion of it, but also what it's setting them up to do down the road. I think Anchorage right now is the only one with that in the crypto space. So seeing now these other players come in and join is starting to bring up the heat too for traditional banks, to your point on Bank of America and others, to say, okay, well, what are we going to do? What are we going to issue and how fast, right? So really interesting there. The other portion too is on the reserve side. There's always questions about reserves, proof of reserves or others. With this, right now, as we see it with USDC specifically, their reserve fund is held at BNY Mellon. Now they might be able to host it themselves, which also brings some more flexibility, right? And the fees that they get to keep as well.
And the Genius Act also brings them towards a tremendous amount of transparency and regulation and management at a very much lower level than they have been until today. And it's actually interesting because if you look at the Genius Act, it kind of separates the men from the boys, if you will, right? You see USDC was already fairly compliant, in my mind anyways, with most of what the Genius Act is requiring. And you have Tether, for example, that have to figure out if they come into the fold and change significantly the reporting and the reserves and so on, or stay out of the U.S. It's not an easy decision, but it's a decision to make. So very interesting.
They will probably make a U.S. applicable stablecoin version of their Tether, probably second version.
Yeah.
But yeah, this is in the context of how I see it is that the financial markets are opening up to the philosophy of move fast and break things, because this is how crypto has been going forward, and not always obeying the rules strictly, especially with stablecoins. But now you see that stablecoins are a genius product, and that everybody sees that this is opening up the world to this new technology. And in essence, that's also the philosophy we did with Blue Bay Ventures. We had the two ways we try to enter the market is go through the regulatory side and do everything by the rules, which is a very slow and tough grind for many companies. You have to have a big balance sheet to get over these hurdles. Or you can go with a technology wise company like we have with Backed Finance, who are the guys who set up Xstocks, and just look at the regulatory the law, and look at it as a code base and see how can we go forward with this code base, and not by obeying the law and applying technology-wise, hump over these hurdles, and this is the move fast and break things and obey the law. This is the way forward, in my opinion. And then you get all this beautiful blossoming of new technology in this financial industry, which I've been in my whole life, and I know how archaic and old these mainframes are. And it's time for something new. We have to move forward, because if we move forward and we do this the good way and look at technology not as a threat but as a new opportunity, then all of a sudden you can have a wallet with stablecoins, with these nice BlackRock funds in it, with tokenized stocks, and get these things to trade, get maybe perps on it, maybe get these things in DeFi platforms, lending platforms, buy a house with your tokenized stocks. I mean, it's opening up all this beautiful stuff in the future. So yeah, I really like what I see at the moment.
By the way, most of the things you said, I'm already doing in my wallet, which is interesting. Yeah.
You're way ahead of the curve, Tal.
We're a bit ahead of the herd.
It's without a doubt the year of the stable coin, right? As I always like to say, the RWA hidden in plain sight, now over $250 billion in total size. Banks are becoming stablecoin issuers. Stablecoin issuers are now becoming banks. We got regulation. I don't think we would have seen these companies like Circle IPO and apply for charters if it wasn't for things like the Genius Act, the new administration, the new SEC, and the new, just different approach to crypto, right? But something else major happened this week. And I always look at kind of like stable coins as maybe now as a leading indicator of what might happen to other RWA sectors, right? We have also billions in tokenized assets across yield coins, across commodities now, bonds and funds, and even now going to be tokenized stocks. So let's get into it. I know everyone's got some ideas and philosophy around this. There's a lot of scrutiny about this first iteration of what we are seeing as on-chain stocks. And it's actually not the first iteration. It's just the one that actually, to me, broke the mainstream. Credit, in my opinion, to Robinhood, because folks like Kraken and folks like FTX in the past never really brought the fanfare and the attention to this concept in the way that Robinhood is doing to go ahead and put tokenization into the mainstream. So now you've got multiple companies out there. You now have X stocks, right? Backed by Bakkt, now powering with Kraken. You've got Denari, you've got Swarm, you've got Ondo Global Markets coming online this summer as well on Solana. I'm going to end my tirade with, I think this was a momentous week, because as funny as it is for people to be able to see that you can swap Fartcoin for Tesla on chain is like, that's something you would never see in traditional finance, right? But you're also
chef's kiss.
It's a little Pepe kiss. But that's the reality of what's possible now. This idea that you don't have to go from money into stocks through a brokerage, that you can have a wallet and start going from different assets into stocks on chain. I mean, this is the experience that I need people to feel for RWAs to take off, in my opinion. And again, Robinhood has a massive distribution. Coinbase is already looking into an SEC license, and this topic isn't going to go away, I think. So I'll open it up to the floor. I know, Nico, you mentioned earlier, already invested, exposed to this trend. Tal, I'm sure you've got some great insights here you want to share. So who wants to go first?
Nico, go ahead.
Now, I think you mentioned FTX, but I think already Binance did a large effort in the past tokenizing stocks, which also didn't fly in any way or shape or form in large quantities, because look, these are crypto entities, and the TradFi world, as we call it, Wall Street, doesn't listen to these young nerds with these crazy wallets and these blockchains. Who gives a damn about them? But when Robinhood starts yelling and screaming about tokenization and tokenized stocks and tokenized this and that, then Wall Street is starting to listen, because this is their main opponent in the ring at the moment. So that's in my opinion the only difference that happened this time around. And we'll see where they take it. Let's wait and see. But I'm very positive.
You got to give it to their marketing too, right? They do a good job.
So yeah, sure.
Go ahead, Tal.
So I think it's actually very interesting, and I would second what Nico said, but I will add to this that for us who've been in this domain for a while, tokenized stocks is not new, right? I mean, if you look at Exodus, for example, that's a tokenized stock that went public, and it started as private and so on. And we believe that eventually all stocks are going to be like that and so on. So it's just another little shiny ornament on this path to going there. But I think it's more significant because Robinhood, and I'm not even getting into the value of what they're doing specifically, and do they own those shares, or they don't own those shares? Is it okay to do it without the permission of a private company? It's almost irrelevant to this discussion. What's relevant is that Robinhood has a very large, strong following of a totally different generation than most of us on this video. And it brings the whole notion of tokenized securities into their radar screen. And that's very significant because the value to me might be different than the value to somebody else. And it's not just about velocity, right? I mean, obviously, velocity is much faster here because, you can do it peer-to-peer, which you can't do it with as easily with traditional securities and so on. So there's a significant value here long-term, but you can also borrow easily against that. You can move it around more easily and so on. And each one of us interprets this differently in our value chain in terms of what do I see in this, right? Does it make any sense to me, and what do I see in this? And that's a totally different generation of players. I know I'm stereotyping, but totally different generational players than the traditional players in the tokenized security space. And I think in that it's very significant.
Yeah, two sides to it, right? There's the exposure, as you're kind of getting to, right? Easier exposure to these assets and having it on an app that's, for very retail facing and whatnot, but also in other jurisdictions too. But the other part that has brought up a lot of fire on socials and in conversation has been, are these truly tokenized stocks, or are these essentially derivative exposure? And what could that mean for the future once these do start taking off a lot? What does that mean for liquidity, fragmentation, and so forth? So Tal, Nico, any thoughts on that end, and where we're going to see these different variations of tokenized stocks going?
So at the end of the day, sorry, I'm jumping in, but at the end of the day, it's no difference, and I'm going to sound very old now in what I'm saying, but it's no different than any investment. You need to understand, what are you really investing in, right? So it's not just reading the title. Every security, doesn't matter if it's tokenized or not, has a description of what it is. And there are legal documents that you can read, and you can read what others say about it if you're too lazy to read the actual documents. But at the end of the day, you need to understand what you're investing in, and not just go by the name, right? And when you do, then you're not surprised, and you figure out what the value is or isn't for you, and whether it is the right investment for you or not. Those tokenized shares, as they're called, have a PPM, and people can go read and see if they're actually investing in stocks that are behind it, or they're investing in a note that is a promise to buy those stocks at a certain point, and how are they gaining from it? It reminds me of the early days of before Bitcoin funds, Bitcoin ETFs, where you only had the grayscale trust, and people thought they're buying Bitcoin, and they didn't understand that they're really buying a version of the futures. And they couldn't understand why it's not moving like Bitcoin is moving. Well, you need to understand what you're investing in.
It's Great point. And that's the beauty of tokenization, right? It's going to continue to create new innovation and new ways to bring products to market, and that's going to scare a lot of people in the beginning. Nico?
The thing I want to hammer a bit is that this is the stablecoin moment for RWAs for the rest of the asset classes, and then what I mean by that is the US, other than other jurisdictions in the world, has seen that stablecoins are the real distributor of their US dollars worldwide, and this will have a significant impact on the US to get more dollars into the hands of people worldwide, to these 7 billion, 8 billion people out there, which is not the case today. These blockchains will distribute these dollars worldwide and in essence, buy US debt on the back end. That's in essence what the mechanism does. This is a very large income mechanism for these commercial entities in the US, these financial institutions. And now what Robinhood has shown to the world, but also to these entities, is that there's new money coming into the system through tokenized equities and pumping up all the equities in the US stock market, getting all the money from around the world into the capital market in the US, which is an enormous tsunami of new capital that is potentially coming in. And Vlad from Robinhood says, hey, I'm open to this business. Please come in. And this is what rings the bells to many people also in the TradFi media ecosystem. This is like, whoa, what's going on? Now we stable coins, now we do equities. Let's get on this bandwagon. That's in my opinion what the world is seeing at the moment.
Happy 4th of July on that note.
Absolutely.
This is what we're talking about. That's well said, right? The stablecoin moment for equities to be able to be distributed globally to the farthest corners of the earth and pump that money into it is absolutely a great way to put it. Now, to end our little segment here, because I don't want to lose you guys, we have such amazing conversation here. There was a lot of kerfuffle about these more private equity instruments. So instead of just on-chain equities tied to public companies that at least have some market infrastructure to tap into, we also saw the likes of OpenAI become, as well as SpaceX and several other types of tokens by Republic and Robinhood, become tokenized. In fact, one of them via Reg CF via Republic, which means anybody in the United States can essentially get exposure, as they say, through this method to a company like OpenAI, which of course we normally would have to wait till an IPO for something like that to happen. And many argue that most of the value has been already, excreted from it. But what do you guys think on this? Is this something that's going to become very common? You have, for those who didn't see it, OpenAI made a public tweet saying, hey, we do not endorse these things. They have nothing to do with OpenAI equity, and we do not allow transfers of our equity without our permission. So is this something that OpenAI is going to be able to keep a lock under, or is this genie out of the bottle and we're going to start to see private markets maybe start to look like public markets? Because the intention is for these tokens to trade.
Well, it's an interesting question because it boils down to regulatory issues in a gray area, right? Because nobody, I believe, predicted that situation where regulations were made, and I'm sure that when OpenAI raised money and issued shares, this was not part of the agreements, right? So I'm not sure how they can prevent it. I'm sure they can prevent transfer of shares and they can approve it, and they might have required investors to do it back then. But if they already own the shares, there's nothing preventing this from happening. I think it's something that regulator will have to eventually figure out, because it creates access that originally was not intended by the regulator, right? Regulator define who can invest in private equities and under what circumstances, and potentially this creates a bypass for that. And regulators may say it's okay or not, and we'll have to see. Until then, I don't see a reason for this to be prevented or how it can be prevented.
It can't. It can't be prevented. This is technology disruption again at work in the financial capital markets, and there's a big chunk of margin in this private secondary kind of market where VCs want to drop a chunk of their shares they bought in an early stage of these beautiful new technology companies, and they just get a bad deal on their side, or in their opinion, they maybe don't get the best deal. And on the other side, there are technology players who see a lot of margin who want to disrupt that margin and say, hey, that margin, it's also my margin, dear OTC desk over there. So no, I think this will be the future of secondary trading also. You can go as a VC and bid up, tokenize your part of the share stack, and just go and try to get funds freed up to distribute to your LPs. That's in essence what a VC wants to do. And if there's no liquidity, this technology can get them liquidity, so they won't be stopped, in my opinion.
I think it's interesting how they do it with a debt or note structure here that Republic is putting together, right? So that is, a little bit of a workaround. But at the end of the day, I think the question too for the investor base is, would you rather, and this goes to your point too, Tal, earlier on reading the documents of what you're actually investing into. But one, it's, can you do your own research, which I think Republic, does its best to kind of, explain everything on their offering page. But two, it's like, do you even just want exposure in general as an investor, right? As an individual, which this is affording them. But again, it's who's selling and their reasoning for doing so. Nico, you're right there. So I'm a fan of it, of the structure. I think it could be optimized, but it's a start.
Yep.
And also, a company like Republic with already a built-in investor base that's there, it's making it easier to educate them and be like, hey, this is what this is. Here's what a mirror token is. And that sets them up for future issuances that are then going to be tokenized, especially as they're closing out their acquisition of INX and so forth for down the road. But
Jason, in Europe, they call it gefundenes fressen.
What's the translation on that?
it's right here in front of you on the table. Enjoy your dinner. That's about what it is, Gefundenes fressen, the better German.
I got to tell you, I'm absolutely thrilled about it because it just once again demonstrates the power of tokenization, right? And sure, on one end, maybe if I wrote $100 million check, I've got preferred shares and I'm directly on the cap table and I'm a VC. But if meanwhile I see that there are everyday Americans now trading this thing, making money on it while I'm waiting around for an exit, I'm going to start knocking on OpenAI's door and say, why are these guys able to collateralize, but I can't, So I think this is great. I give kudos to everybody who's innovating in that space. Yes, emphasis on do your own research, know what you are buying so that you do not get surprised. That is the key. But wow, what an episode. I can't wait to have you both on again. Happy 4th to everyone. We're going to keep on going with Tal, Nico. Thank you for joining us.
Thank you for having us.
Thanks, guys.
Welcome back to Security Token Show interviews. This week we have Yuval joining us from Digital Asset. Yuval, how are you today?
I'm great, Jason. How are you?
Doing great. You guys have very, very eye-opening news that came out. I think the whole industry has heard about it by now, but it's a pleasure to have you to dive a little deeper. You guys just raised a monster round, $135 million. Easy Labs just today, you guys announced is also joining in on that round. Tell us a little bit about your experience raising capital, what institutional focus looks like in terms of tokenization and their approach to it.
Yeah, I mean, listen, I think that it's an interesting time to raise money, especially for this space. And there's a lot of challenges. I think that if I look back months as we were putting this together, I think that what probably resonated the most is that we weren't talking in future tense about Canton Network and talking more about, what's happening right now and where people can participate right now. And I think that, us being patient, we skipped ICOs. We didn't do an ICO. We didn't do a pre-mine. We've been very patient and had a long-term vision of what we're trying to build. And I think that patience paid off. So I think that institutional players know how to ride momentum, but they also like to invest in value. And I think, having a real story of, what is available now, how they can participate now, was probably a very important component of it.
100%. Makes total sense, right? Slow and steady, but doing it right the right way. And you do have, I think that it's worth noting the people that did participate, right? DRW, Tradeweb Markets, BNP Paribas, and so forth. These are big names that are participating. Tell us a little bit, and I know it's a strategic round too, so tell us a little bit about maybe what the non-obvious superpowers or value adds that some of these investors bring to the table for Canton, other than just a simple cash infusion.
Yeah, listen, I think that I'm pretty sure that when we talked last, one of the things that I said is, one of the biggest differentiators of Canton is the ability to do configurable privacy on chain, which is very different than what a lot of others are calling privacy, which to us is anonymity. And I think that once you start getting into the nuance, detail, and difference, the type of players we work with understand it. And I mentioned that, payments, collateral management are probably two really good use cases. Just yesterday I heard from someone who works for a very large publicly traded company that a lot of stablecoin providers have pitched them to do intercompany payments. And they're like, we're a publicly traded company. Why would we want the whole world to see, what is our activity? So, payments and collateral management is something that we're very much focused on. And, if you look at the businesses of those organizations, they do a lot of payments and a lot of collateral management. So it kind of gives you a hint, and maybe also related to the announcement that happened the day after we announced our round last week.
Absolutely. And I do want to touch on that announcement. But just before we do, I do have to ask, in terms of use of funds and whatnot, what next steps look like for you guys? Where would you say you would, allocate the first incremental dollar of the raise? Would it be like R&D or ecosystem incentives, integrations with clients? Any light that you can shine on that?
Sure. So, the round, the funds, so first of all, as a company, we don't necessarily needed the funds from a growth perspective, but it's more of really was important to have these type of players be part of the cap table. The use of funds is primarily going to be around three areas. One is there is an insane demand right now for Canton. And, we're going to continue to focus on scalability, developer experience, security, all of those features. We believe that we're in good shape, but there's always more work to do. So, growing the product and engineering team. There's going to be another angle that, a lot of people recently have told me, where is this Canton coming from? We've never heard about it, which to some extent is intentional. Again, I think that it was, to me, very important to come with a different story of, again, rather than just, hey, we're launching another L1 and the future is bright, but actually to say, look, we've been working on this for so long, quietly, under covers, and now it's time to actually show what is the value. So, a big part of it is going to be around marketing, branding. We just hired a new CMO, Jonathan Isaac from CoinMarketCap, who joined our team, and very excited to be working with him. So that's going to be another another area of growth. And then the last one is there are a few opportunities that we will reveal in the next months that bring what I call an asymmetrical value to the network, right? So if I think of a public network, there's probably three tenants to the network. It's the users, it's the assets, and then it's the applications that brings the users to the assets, right? So there's a few entities that control very unique assets, and there are a few companies that can create applications, and I call those relationships like these are the asymmetrical relationships that if you can bring them into the network, you create this really like convexity in the value of the network. So the third use of funds is going to be co-investing in some of these relationships. How do we help accelerate some of those relationships coming to the network faster and more efficient?
Makes sense to me, right? You're not just bridging, TradFi and DeFi, but also the players themselves, the infrastructure to bring it all together, which I think is part of why tokenization and real world assets have taken their sweet time I think
maybe just on that, I think that what's unique about how we as a member of the Canton Foundation, I think that it's not to confuse with us effectively going to pay for relationships. That's not what we do, both at Digital Asset and at Canton. All of the growth at Canton so far has been organic and because people see the value. When I say invest, it's really if there are partners that think that some piece of infrastructure needs to be built for them to really add value, we at Digital Asset would be willing to put some skin in the game to kind of help build that infrastructure to accelerate. But as a matter of policy and the foundation is we don't buy partners. And I think that that's an important distinction that we would like to bring to the crypto market.
100% makes sense. And I think that obviously results speak for themselves. And of course, the merit of Canton will, of course, earn some of these relationships, right? Which brings me to the piece of news that you kind of hinted at earlier. I know collateral mobility and management is a focus for you guys, which is the fact that you guys are now working with Nasdaq Calyspo, also QCP and Primrose Capital involved here for collateral and risk management. So tell us a little bit about this piece of news and what KPIs maybe you guys would be looking at as convincing you that this is transitioning from proof of concept over to more scalability type of business.
Sure. So listen, I think that one of the challenges of crypto networks is how do you onboard the institutional players. So there's a lot of solutions, and there's going to be more solutions in Canton for retail players around wallets and different applications that you can consume. But really, the opportunity, and this is what everybody's trying to go after, is how do I integrate into the large institutional players? Like how do we start really seeing the movement of large scale assets? And the work with Nasdaq, which has been phenomenal. And I really need to thank Matt from Nasdaq for being a great partner there. But it's really how do you bridge those worlds? And I think that a lot of times people at crypto underappreciate not only how challenging the integration is, but if you change the way that people manage their business, you're going to have a challenge. So rather than think about, moving collateral on Canton as like a brave new world, it's actually no different than what you do today. You need to move initial margin or variation margin. It's literally the same. It's governed by the same documents. There is the agreements, CSA agreements. There's the same terms, eligible collateral. There's all kinds of, everything looks the same. It's just that if before I would send messages and the collateral will move with a delay of minutes, hours, days, now it moves in real time. So you're effectively saying, I'm not changing the way you're conducting your business. I'm not changing the fundamentals of your business. I'm introducing new asset classes that you could do it with, the same asset classes that you're already doing it. And it's just that the velocity of those assets is much faster. So by integrating to Calypso, you're not changing that behavior at the customers, and now they can just integrate and benefit from Canton without really boiling the ocean. So, that's why I'm very excited about that. Those are the type of integrations and partners that I stated early that we would love to invest in, because again, I think that we're not trying to reinvent finance. We're actually trying to allow finance to behave the way it was designed to, which I think today it still doesn't.
What's going on, everybody? It's time for this week's RWA Foundation update. We've got a lot of news cooking, some great new announcements to make with new members that are joining the foundation. We've got over 30 of the leading blockchains, the leading marketplaces, tokenization engines, asset issuers, DeFi applications, even critical infrastructure like ratings agencies and interoperability providers and oracles. We're unifying the entire industry to be able to tackle the challenges together. And we don't want to leave out the user, the RWA crypto native, if you will, as well. We want to give you a voice. That's why we're launching the Wally DAO. You can check it out at wallydao.xyz to learn more in order to be able to help you enter and benefit from RWAs, enter the world of RWAs through the Wally token. It's lots of cool ways with benefits and perks and airdrops and the ability to participate in an RWA treasury. So much we're cooking up, including a new initiative that we're going to be announcing as well. So stay tuned. It's all happening this month. But for now, everybody's going to enjoy the 4th of July. We are proudly American, even though Wally is for the world. And with that, let's head on to the rest of the week's news because, wow, there's a lot going on in RWAs. Wow, I wasn't kidding. There is over 30 articles that we've covered on the episode today. And so I'm just going to kind of really read through them. As you might have noticed, for those of you who are repeat watchers or listeners, that Kyle did not make the show today. So it's just me here to give you the latest announcements and news, which we're going to start off with the newest tokens, starting off with something pretty darn cool, the S&P 500. Okay, we all know it. That's the S&P DJI that manages that. They've partnered up with Centrifuge in order to bring the S&P 500 index on chain using Centrifuge's infrastructure, which is awesome. We have seen it come on chain before, I believe, on INX and through Backdate maybe, but very cool to see. Also, Midas, Fasanara, Morpho, and Steakhouse Financial have teamed up to launch a private credit fund, and Vault, of course, since these are Vault experts involved. As you know, I'm huge on vaults. Private credit is going to be a massive, bridge or injection of capital in RWAs, and vaults are the key to making that happen. So check that out. We also have Bitfinex Securities tokenizing 2 bonds with Castle Community Bank, which is awesome to see more bonds come to market. We also have Arbra, ARBRA, tokenizing high conviction baskets of pre-IPO shares on Kolb, COLB. So we're talking about SpaceX, Ramp, Varda, and others that they've created a basket out of. Again, pre-IPO companies, a hot topic as we discussed earlier in the market movements, but so are tokenized public equities. Gemini is now also live in the EU, just like Robinhood, and they've started with Master MicroStrategy. Or now just strategy, but MSTR is now on Arbitrum. And large Turkish private bank has issued 100 million digitally native note on the Euroclear. And this is actually Turkey's largest private bank in general. So this is no small numbers that we're going to keep seeing coming out of bonds in Europe. Clearly the hotbed for tokenized bonds right now. And finally, Abu Dhabi Securities Exchange and the FAB announces tokenized MENA bond using HSBC's Orion platform. So this is a very institutional deal, but once again demonstrating that there are bonds happening right before our eyes. Most people can't access them. Most people don't care about them, but it's a great application of tokenization. And we've got more updates on tokens too. Bybit Spot now lists X stocks, their on-chain equities as well, which also power Krakens and created by Bakkt as well. Denari and BitGo, Denari, another leading tokenized equities player, they've partnered with BitGo to create a single API for crypto and tokenized equities to come together. Spyco, a leading large money market fund issuer, over $380 million that they have tokenized, is now using Chainlink's interoperability protocol. So as we've seen with many other products, they are going multi-chain for those assets. And finally, MetaWealth hits an RWA milestone, $1 million distributed to token holders for their various over 10 real estate deals that they've now tokenized in Europe. We also have a lot of partnerships this week, everyone. A new pilot from Securitize and Redstone, I think, is pretty cool, creating a single source oracle. They call it the trusted single source oracle for tokenized fund NAVs. NAVs obviously being the net asset value of fund, being a critical piece of information relating to the fund value. And Chainlink also announced on-chain compliance engine in partnership with Apex Group, Gleef, and the ERC 3643 Association. Which is not surprising because that was, I believe, also spearheaded by Tokeny, which Apex Group now acquired, right? So big win there for compliance in general, as that's a critical piece of tokenization infrastructure. JPM Connexus is also partnered with S&P Global, but not on their S&P 500, but actually for tokenized carbon credits. Not an uncommon topic we've seen discussed for tokenization in the past. And we know Northern Trust has their whole platform targeting this, as well as many other issuers in the space. And I think this is cool. Particula, you know them for their great ratings and assessments, and you know them for their great research and data and information, but now they are also officially a listing sponsor. What this means is they're now qualified to essentially onboard issuers onto 21X, which, if you don't know 21X, they're one of the only EU licensed platforms across the board that is now live, tokenizing shares. They have primary and I believe secondary, if it's not live soon. And then GF Securities announced that they're tapping Hashkey for their tokenization efforts over in Hong Kong. We also saw more announcements in the industry. ONI, or One, but that's ON lowercase e, by Onry. If you know them previously, names, I believe. Now their ONYC is officially the new name for their latest ONI product, which is now multi-collateral yield bearing. I believe about 16%, can access it with stablecoins. It's powered by stablecoins. It's an amazing product. You should go check it out. Very cool to see this segment going into the tokenization space. Link, which we've been tracking for quite some time now because of the amazing partners that are involved, heavy hitters across from T0, powered by Arca's underlying treasury fund that they launched. It's on Avalanche, B2C2, Crypto.com, T0, US Bank. Huge partners in this. It's officially going live July 15th. So very exciting. I know there's a lot of attention around this. EU Central Bank also committed to 2 research initiatives regarding CBDC. So this continues to also be a topic, especially over in Europe, that seems to be very pro CBDC. Also a really big announcement. This is one of those initiatives that we love to see, whether it's a grant program or a fund or some kind of vehicle that helps give resources to folks to tokenize. In this case, using Ondo's ecosystem, but Pantera, which is an investor in Ondo, they've partnered up for the Ondo Catalyst fund for allocating to on-chain capital markets builders. Of course, with that preference around Ondo, $250 million is no small amount of money that's going to come gushing into the Ondo ecosystem. Another private credit tokenization platform is also coming to market, Zolt. So check out Zolt if you're big on private credit. We know there are many other players now, and we saw even the likes of Apollo get into the space earlier this year with a cred. And Stable has revealed their own layer 1 blockchain built around USDT payments. If you're interested in stable coins, their technology. And Project Guardian's FX paper came out, specifically around tokenized deposit liquidity. That's worth a read if you're interested in that topic. Some more stablecoin news. MENA is the first bank to officially integrate Ripple's RLUSD. So now we have banking activity for Ripple stablecoin. Paxos's global dollar, their USDG, is now available also in Europe, which seems to be great timing for all the activity happening over there. And World Liberty Financial is now partnered with Plume. So USD1 is now a PUSD reserve asset. And finally, to end this week's segment of what might be the most news we've ever had to cover on the show, the most interesting topic of regulation. And this is a big one, okay? The SEC chair has come out and said the end of the regulation by enforcement era has arrived. We no longer need to live in fear without any kind of clarity about how we can build in blockchain, in crypto, without the SEC simply just going after you. Now he has identified that tokenization is an innovation. So shout out to Chair Paul Atkins, who actually used to be an advisor at SEC before he took on at Securitize, before he took on this role. So the man knows tokenization well, and I'm glad to see such a forward-thinking chair for the SEC for this industry. And Argentina is also getting savvy. They've introduced an RWA regulatory framework, so I can't wait to see a lot of activity heat up over there in Latin America for RWAs. Back over here in the United States, SIFMA, they're crying foul to the SEC. They're saying that they're not a fan of folks like Coinbase and Robinhood kind of skirting around the rules or getting no action letters to be able to explore this technology. As I just said, the SEC is supportive of this, but SIFMA being one of the sort of industry groups, association representing TradFi and Wall Street and specifically good regulation for markets, they're not so happy about all this. I think maybe they're coming from a good angle, a good heart, but this is no time to stop the tokenization wave. I'm going to put you in a stop right there. Finally, that's what we're all focused on here on the Hill in the House. The U.S. House now is debating over 3 different bills. They're calling it July Crypto Week, as the Genius Act, the Stable Act, and the Digital Asset Market Clarity Act all get discussed and potentially reworked or combined. Who knows what's going to happen out of this, but it will certainly be telling, as it seems that the direction is saying all things are pointing to some kind of legislation passing, which has been so desperately needed here in the United States. So, wow, what an exceptional week of news. Honestly, this might have been the most important weeks in the entire history of tokenization. I'm giddy. I'm thrilled. I just already know what all of this means for the future. You should be excited. It's amazing to see folks like Robinhood and others really bringing this topic, this technology, tokenization mainstream. And with that, I now have to pick one company out of all of these amazing issuers, blockchains, infrastructure providers, and the like to be my company of the week. So let's just get right to it. Okay, folks, I think you can already guess who I'm going to pick. If you don't know this segment, it should be obvious to you. Every week, we pick a company of the week. We've been doing this for now 291 episodes. That's over 6 years, essentially every Friday, that we're bringing you what happened in the space, chronological history of the industry. And each week, there is at least one, sometimes 2 winners, of course, when Kyle joins me as a co-host. Unfortunately, he's out and busy in SF this week, hopefully having an incredible 4th of July. And on that note, I'm going to have to, of course, give it to an American company today. And that American company, you probably already guessed, is going to be Robinhood. I have to give it to Vlad Tenev. He did it with style, introducing tokenization to the world. I couldn't have done it better myself. And wow, the reactions are hot. Mainstream media is picking this up. And most importantly, as I like to say, the cat is out of the bag. The genie is out of the bottle. Nothing can be done now to stop the true utility of tokenization shining for public equities. This is an accelerant, folks, that now will be endorsed, as we heard earlier from Nico, that this is just like stablecoins. money coming into U.S. equities is good for America. So what are we going to do? We're going to support that as we should. So naturally, this should help put pressure, whether it's on the regulatory side, whether it's on the infrastructure side, to get to a stage where we can truly utilize the blockchain technology natively, end to end, like we see today with a company like Exodus using Securitized, that's publicly traded, as a public company, still using the blockchain for their transfer agency, for tracking their cap table. But now we're going the distance. We're making it so that you can leverage utility. Robinhood is saying, hey, we're going to enable, peer-to-peer collateralization, all of these different benefits that we see with RWAs to the masses, starting in Europe. Coinbase is going to try to do it here in the United States. This is such a big deal for the industry. But this week, Robinhood, you got all the attention and love for doing it big. So you're obviously have to be my company of the week. And with that, everybody, that's our show. Hopefully you agree with me. If not, leave your feedback in the comments. Give us a subscribe if you aren't already. Like this episode. Give us 5 stars if you're listening on one of the podcast channels. It really helps out a lot. And when you go ahead and repost or clip anything, of course, we're going to give it some love and support it as well, because we do appreciate you sharing this content that we work so hard to bring you. Of course, STM.co, we've got the largest repository of data when it comes to all information on RWAs out there. We've got amazing reports and research. Our Tokenized This 2025 recap report just came out, so you can actually read or chat GPT the summary of all of the different panels you might have missed, especially if you couldn't attend us in person in New York City in April. And of course, come join us in the Wally DAO, in the Wally community. We are thriving. The herd is coming together every week on Thursdays. We are talking at the RWA watering hole, featuring spotlights. And on Mondays, you can now catch Mondays on Chain by STM at 11 Eastern. We got Collat. We got a lot of other great guests coming on. So come check it out. But everybody, have an amazing weekend. To all the Americans out there, happy 4th. Go America. Proud America. I got to bring it out here. Shout out to Solana. Solana Accelerate this year. They had some good swag. Happy tokenizing, everyone.